So if you fail to plan, you are planning to fail. Somebody told me that once. So I think I agree with it though. I've never run a business in my life without a business plan, and I'm absolutely shocked to find out how many people do run their business without a business plan. And even more so, people who build a business plan, but they don't actually track any of their results until the end of the year or at all. They just build the plan and then put it in the closet. So none of that makes any sense to me. That is not how we do business. And as a coach, I can't actually help anyone unless I know what is going on. So let's introduce you to the business planning document. This is something that you do in December every year, and you make a plan for your year. And we, as a group, we audit your plan and make sure it all makes sense and it's smart and realistic and aligned with your long-term goals and long-term vision. So let's get into it. So if you venture into your Google Drive and go into your daily reports, and up at the top here, you will have your business plan. Your business plan can also be found in the company trainings and standard operating procedures if you haven't uploaded it already. But typically I'll just upload it up into your daily management reports here. So your new business plan. So you would click on, well, that one's actually mine. It's already filled up for the year. So let's go in and see how you would do it. You'd go into the company trainings and standard operating procedures. And you will find down here in the business planning section, the very first link would be the template for the new business plan. So we'll open that. And I would just download a copy of it. So we don't want it. We can click here, download a copy of Microsoft Excel. And then I would actually just place it into my daily reports here. I drag it in to my daily reports in my Google Drive. So it'll probably already be there for you because I usually set up everyone's Google Drive at the start of each year. But just so we're not messing with my personal one, there we have it now. I'll just close these tabs. The business plan template. All right. So this first tab here just gives you a very basic overview of each of the tabs in the business plan. We got the revenue map, which is a high-level overview of the entire yearly plan, how many estimates we need to complete, how much booked, how many sales we need to complete, how many jobs we need to book, how many people we need to hire. I'm going to go through each of these tabs, but we got the sales plan, production plan, our organizational structure, staffing plan, marketing strategy, marketing budget, the profit and loss budget. So that's our cash flow statement or P&L, people say. And then balance sheet, just all the assets we own versus our liabilities. So if we go to this dashboard, this first dashboard, it just has a basic overview of our purpose, realizing our potential and actualizing our dreams. That's what I'm doing this for, is I want to live a free life and do the things I want to do in my life. Our mission, the 5-year vision. This is, you'll have to do it for yourself, but say your 5-year vision for your franchise, our company values, and then a dashboard of like the plan for the year. And then this down here is basically a checklist of the things that you want to do in your first year in business. So like the foundations, you want to be doing at least 10 estimates a week. You'd want to be spending at least 10% less on marketing. You want to be doing, I'm not going to get into all these, but it's a dashboard for all the different things you want to be aiming towards in your first year in business. Year 2 is team building. So you want to be hiring your production manager, hiring your sales reps. Yes. The next tab here is where I want to focus. We have our revenue map. So in our first year in business, we'd want to fill out, or any year in business really, but we want to fill out our goal for the year. So say our goal is going to be, we'll just keep it at 350 for the year, 350,000 for our first year in business, which means we need to book a little bit more than 350 because maybe not everyone will book for that same year. and we can fill in what calendar year we're in, our first year. And this will tell us, and then this might be our breakdown of where we want to be in 5 years. So say we want to hit just over $1 million in our year 5 in business. And this is kind of assuming a 35% growth rate. And that's the goal versus our actual results, which will be right here. Down here, the only tabs we really actually need to fill out is the yellow tabs. So depending on your market, and your coach will give you advice, or myself, if I'm coaching you, we'll figure out the average job size in your market, which will help us determine how many leads and sale estimates you have to do. So assuming about a 1 out of 3 sales ratio, so for every estimate completed, we're going to book 1 job at $6,200. This business plan will break down the entire thing for us, so we know exactly how many estimates we need to do during the year. So right here, this yellow tab is basically what percentage of the business plan are we going to be selling during what months. So this is kind of a generic overview of what you can expect to be selling. So about 4% of this $350,000 will get booked in January. So if you multiply 4% times 350, that's where this number here is. Our booking goal for January would be $15,000. And to hit this $15,000, we'd need to do 7 estimates, assuming we were selling at 35% sales ratio. So that's it. We need to book 2 jobs. To book 2 jobs, we need to do 7 estimates. So that's not very much. That's like 2 estimates a week. Getting into January, our sales, we're going to try and do 12% of our sales for the year, which comes out to $46,000 booked for February. If you divide that out by our average job size and our sales ratio, that gives us 21 estimates in order to book 7 jobs, which would give us a total of $46,000 of booked jobs and a cumulative total of $61,000. And then it goes on and on throughout. So our highest booking month for the year, if we're trying to do this business plan, is $96,000 we have to book in May. June's going to be $57,000. And if we do all that, it'll add up to our goal, which is $404,000 booked. Right here, you can actually see that we need to do 185 estimates for the year. We need to book 65 jobs for the year. And this is a little bit high, I can see. So we can lower the percentage down a little bit. So maybe we could do 23%. That should drop down. Yeah, there you go, 103%. Or actually, let's just do 21% there. So if we do 21%, it'd be 1%. So let's go even drop to 20%. So that makes it a little bit less overwhelming. So we need to book 77,000, which is a little bit nicer because we're also training crews and setting up our season in May. So that's a very intense month every year. So this would put our May at 20% of our sales booked, and that would bring us to 265,000 booked by the end of May. We need to book 12 jobs in May. So every other day we need to book a job, and we need to do a total of 35 estimates. So that's, divide that by 4 weeks or whatever. It's 4.2 weeks in a month. So, that is like 8 or 9 estimates a week, basically, at 35%. 35% is quite conservative. I think people that are well-rounded in sales should book it around the 40 to 45% range. I know I personally booked at about 45%. But every year, the nice thing about business planning is you fill these in at the end of every month is how many actual estimates did you do versus your goal. And every year you get more and more realistic with your planning and more predictable in your business planning. And that is why we have a business plan. Every year we get more predictable, and this business is so freaking predictable. That's why I love it. It's really easy to predict and makes it easy to put people in place and count on our business plan, and that we're going to earn the money we want to earn so that we can make the investments we want to make in our life, business, real estate. I don't care what you want to buy, but go on that trip you want to go on, whatever. Down here is the production plan. Production plan, obviously, When we book jobs, we collect deposits, but we don't produce jobs at the same time that we booked them. So like there is a seasonality to the business in terms of when's our sales season and our production season. So if you look here at the production, we actually don't start typically, most markets. I tend to start in March, mid-March often, but most of the time you're going to start production in April. So here we have 3% of our production. So this number here, 10,500 is coming from 3% multiplied by the number up here, the revenue goal up here. And that's going to give us our numbers down here, right? So that means we need to complete and produce 2 jobs, which is based on our average job size. Again, it's dividing it out. In May, we're going to need to produce $71,000. So we're going to have to produce 11 jobs. So again, it's divided it by the average job size. And that would mean by the end of May, we're at almost 100 grand in produced revenue. And that moves all the way through until the end, which would bring us to a cumulative total of our production goal. Down here is the final area, which is our operational requirements. So it tells us how many vans we need to have in production, as well as how many painters we're going to need to produce our goals. So how it's calculating this is based on the top up here, but the revenue, the monthly revenue per painter is $14,000. And the way that that's getting calculated is, you can kind of see it up here, but it's 35 hours a week is how many hours of work is getting worked in a week on average, it's accounting for rain and whatnot. There's 4.2 weeks in a month, and then it's multiplying it by this other tab over here. But that is actually grabbing our charge rate, which is how much we charge our customers per hour. So if I go over here to the charge rate, where is it? Production. Our charge rate this year is $85 an hour is what we average charging our customers based on our estimate system, which we'll cover in another video. But all of that gives us our total, and then it's adding an extra 15% for productivity, so or an extra bit of productivity. So I'm going to actually delete that. But we can essentially, based on those numbers, one painter can produce $12,000 of revenue into our business. So what happens down here is it takes the total that we're producing for the month, so 63,000, and it divides it by how much one painter can do in a month. So in this case, for the month of June, 5 painters, so it's dividing that number, 5 painters can produce our business plan. So that helps us plan our capacity. We know that to hit our goal, we need to have recruited, interviewed, sourced, and effectively hired 5 A players, 5 A painters. So it's all about planning, right? That's what it is. It's a business plan. We're projecting out and being so that we can be proactive about absolutely everything. Vans needed in production. The way that that's getting calculated is, again, if we go up here, our monthly van capacity, we're saying here that one van can manage about 12 painters. So on average, there's about 3 painters on a crew. One production vehicle, which is moving crews around and moving crew kits around, assuming that all the employees are internally hired and internally recruited employees. Realistically, one van could probably do up to from between 12 and 15 painters, really. So I would actually even go to 15. Like basically one van can easily manage 4 crews. So I'm going to say 15 painters. 1, 2, 3, 4, 5, 6. Oh no, that 4 crews would be 12 painters actually. So I'll leave it at 12. Yeah, that pretty much plans out our production in terms of employee requirements and our vehicle requirements and our crew kits even, right? It tells us how much equipment are we going to need? We're going to need enough equipment for 6 employees. So this is great. You can do your whole business plan with 6 employees, or 2 crews of 3, or 3 crews of 2. Down here, This is also our online review goal. So it's basically aiming for about 25%, I believe, of our clients are going to give us a 5-star positive review, which is very important to be setting Google review goals in your first year in business. Actually, your first like 5 or 6 years in business specifically, to build up that account. And that is where you're going to be able to drive a lot of review and free leads and free estimates, and drop your marketing budget and marketing expense dramatically. So the sales plan right here and the production plan over here is really just taking each of these months and breaking it down by the week. And that becomes how we're going to cover it in a couple of videos from here. We're going to cover goal setting and review, which is like formal business coaching to execute the business plan. It's basically formal accountability coaching and building strong results-oriented plans. But here, on a weekly basis, if we know that this is taking the percentages we have in the revenue map here, so if we have a sales goal of 12% in February, it's taking February's goal and it's breaking it down into smaller pieces. So 12 divided by 3 is 3%. 3% of our business plan we're going to book in that week. So that's about $11,000 a week if you're looking at February's tab. So $11,000 divided out by our average job size, which was $6,250. We need to book 2 jobs that week, which means if you divide that by our sales ratio, we need to do 5 estimates for the week in order to book those 2 jobs, which gives us the 11,500 in booked jobs. And if you go back even further, the leads, we need to get 7 leads in order to book the estimate goal of 5. Now the leads is taking account of a 40% lead slippage, which means that not every lead that comes into our system and like into our database necessarily ends up getting an estimate. For various reasons, they slip and they decide to cancel their estimate, or maybe they're not ready for their estimate or whatever. But we need to make sure we are getting more leads than we do need estimates for the week. So again, it goes back to proactivity. We need to be on top of this. If I know that I need to do 7 estimates or 8 estimates next week, I have to block off time in my Google Calendar to hit that estimate goal. And I'm going to need to make sure that I have probably between 12 and 15 leads available for me to schedule those estimates in order to hit my bookings goal. Now, yeah, that's a very basic overview of it, but our whole business plan essentially comes down to how many estimates do we need to build our whole company. And that is the one number I focus on the most out of everything. Is the number of estimates that you complete really defines your long-term success ratio. So the more estimates you complete in your company, and our whole system-wide revenue as well, the more sales we do, the more bookings we book, and the more produced jobs we produce. So that is how we track our weekly results, is right here in this little light gray tab. And that goes on week to week. So there'll be minor adjustments, but for the most part, this is all broken down for you. It's all automated and programmed into the algorithm here. And same goes for production plan. We start production in April, and it breaks down our goal. So in April 19th here, you would see we're going to do 1% of our revenue produced, which would be $3,500 of produced revenue, basically 1 job. And at the end of the week, we can write in what actual revenue produced we achieved. If you go over to the far left here, it tells us how many painters we're going to require for that week. So 1.2 painters, 2 painters, 3 painters. So obviously we can't hire 1.2 painters, but one good painter who's 20% productive could do that job, assuming 35 hours of work for the week, right? It'll adjust if I change this to 30 hours or change it to 50 hours a week, right? Then I only need 0.8 of a painter. So, a part-time painter who's really productive. But you can fiddle around with all these different variables. But again, it all comes down to being really realistic with everything. Our next tab is our cash flow statement. Cash flow statement takes everything from our revenue map, all of our revenue, and breaks it down into how much is coming in, how much money is coming in at what times, and how much money is going out at what times. So we're going to get more into this in the financial modules, but the cost of goods sold is all of our variable expenses. So we end up spending about 40% on wages, 12% on paint and supplies. We got our royalty expense here, and there we go. Yeah, and basically the whole thing breaks down for us. And then we have all of our different expense categories, which we'd have to fill out at the start of the year. This is something you do with your coach or with me. And we build our whole cash flow plan on a month-to-month basis. How much money is going in versus how much money is coming out. And we can forecast how much we're going to earn for the entire year over here. So if we had no expenses, we'd make $125,000 of profit after our variable expenses. But we will go through all this at a much higher level in the business planning session that you would have with me. Marketing budget. This is a way to break down all the different marketing expenses, how much you're going to spend on each marketing tactic. And you'll have to think through this really carefully as well. And the more data we get every year, the better. Marketing strategy is deciding what is the strategy you're going to have for generating leads in your business. So cold calling, 55% of our leads are going to come from that. So it's pulling, all the data is all pulling from that revenue map. And so if we know we need 21 estimates in February in order to hit our goal, that means cold calling is going to be 55% of that. So we need to do 12 estimates that are generated from cold calling efforts. And we haven't got to that part of the training yet, but on average, we generate about 1 estimate every hour of cold calling. So I need to do 12 hours of cold calling for the month to hit this goal. So I'm trying to paint a picture here. Everything is thought through in detail at the start of the year, right? We're not just winging it, right? I could build my whole business plan on just doing 100% cold calling. For $350,000, I could do 100% cold calling, and that would be 21 hours of cold calling a month, which would be not very much. That'd be like 6 hours of cold calling a week, and I'd hit 350,000. 6 hours of cold calling, that's like nothing, right? It's not even high enough. You wouldn't even be able to you could barely hire a marketing team to go for such a little amount of time. But the ease of doing that goal is quite ridiculous, as long as you can go out and just cold call and walk around in neighborhoods and talk to people. So yeah, you can pick how you want to run things, if you don't want to use cold calling, there's other tactics, but you need to think through it and make sure that you're going to hit your estimates goals every week. If you keep moving over, you're going to get into the organizational structure. This is basically a chart that you're going to want to build. There's another training where I actually show you how to build it. This is just literally a picture, which I copy and pasted, right? But to build this organizational chart, there's a training on how to do that. But what I love about it is it literally outlines what the org structure looks like, who's reporting to who, and who's responsible for doing what in the company. It's a really simple visual way to understand what you have to build from like a HR and a people standpoint, right? If I need to have 6 painters, my crew might look like this. It'd be 1, 2, 3 job site managers. Each job site manager, or you wouldn't actually, if you only need 6 painters, it would just be these 2 job site managers, 2 painters working under each of them, and maybe an operations manager, or maybe you wouldn't even need an operations manager. You would just have them report directly to the owner, right? This looks like it's a team of 12 people. So this is basically what $1 million franchise looks like. 12 painters, an operations manager, a sales manager, a marketing manager who reports to the sales manager, and then accounting and bookkeeping who reports to the owner. And then the owner of the franchise has 2 people reporting to them, which is the sales and the operations manager. If you zoom in, you can see the deliverables. What are the core? We're going to get into this when we get into recruitment at a higher level of like, what is each person responsible for delivering to the company as per their employment agreement? What have they been hired to do for the company? Yeah. Again, I'll get into this more when you can go and visit the the training on building your organizational structure chart, which is this one. The recruitment plan, once we know our organizational structure that we have to build, so in this case, say it's this one, I know I would need to recruit however many painters. So this is going to all automatically update based on my needs as per my business plan. All these are attached to the revenue map as well. So it's telling me that I need to recruit 6 painters. So this will break down just like we do with sales training and production stuff, it's going to filter down all the way down to how many applications do I need to generate in order to hit my recruitment target. Okay? So very similar to the sales stuff. If I want to book $100,000, I need to know exactly how many leads I need to generate to get to the estimates that I need to complete in order to get to the jobs booked that I need based on my sales ratio. So recruitment's the exact same thing. I need to make this hire. I need to know how many interviews that I have to complete. I need to know how many leads or applications I need to generate. And there's going to be a cost per application, right? If I need to generate like 35 applications to hit my hiring goal of 1, then I'm going to have to, and it's going to cost me $20 per application. I know it's going to cost $700, right, to generate that many applications. So, yeah, this is just a nice tab for that. Yeah, you can put all your subcontractors in here if you're going to be using a subcontractor model. So just all their different certifications and just information about them. And over here on the far end of the business plan is a nice consolidated 5-year plan. So, first year you're going to do 350, and then this is the growth of the business and what the actual income statement's going to look like, or what the target income statements are going to look like. So this is my pro forma. I've accounted for inflation, but maybe my first year in business, I'll make 53 grand net profit, then it jumps to 78, then 90, then 110, then 171, right? So that's about a 70% net profit on $1 million business. And I've done this business. I've hit these numbers already in my life, so they're pretty accurate. At the end of the day, it's all about just executing the business plan. So that is an introduction to business planning, and we will see you in the next modules where we get more into the nitty-gritty of all this. Yeah.